All right, guys, welcome back to the channel. Economic Prepper here. Wanted to talk to you guys a little bit about this new real estate market that we're in right now. And this is just completely different. This is absolutely completely different. You got higher interest rates. You got Fed Chair Jerome Powell still looking to raise interest rates. And we are right here. We're in Florida today. We're in Florida today, but here we are. This is January 2023. Interest rates are right around 6.5%, and they're expected to go higher. Real estate agents are literally looking to move properties, and properties are sitting. This particular unit has been sitting on the market for over 60 days. Now, 1 year ago, this unit would have been on the market for maybe 1 to 5 days, and then it would have been under contract. Now, question is what is this real estate market going to be like going into 2023? Are we going to see the traditional real estate market that we've seen in previous years, where all of a sudden buyers automatically come to the market just like clockwork? January, February, March, April, they're buying houses left and right. Sellers are selling properties. Is that going to happen this year? That has yet to be seen, especially as the economy makes a tremendous turn for the worst. Let's just be honest. Now, simple fact of the matter is that we can already start to see a little bit of demand picking up for vacationers going into the summer of 2023. So the question will be, if, especially for, beachfront properties like these, let me just go ahead and let you guys get a quick here. So as you can see, this is definitely a beachfront property. We're pretty high up, so you can see that no one's here yet, right? No one is here. Look at the white sandy beaches. No one's out there yet, right? And you can see it's warm enough to be out there. I don't know if you can see some of these people over there with no shirts on. Everyone's, running up and down the sand. There's a couple kids out there skating. Let me try to zoom in a little bit. But this is actually warm weather. It's warm enough. You can see there's a kid down there, just playing. What is that? I forget. It's the hacky sack game. Not the hacky sack game. Somebody help me out in the comments down below, whatever that game is. But the simple fact of the matter is that, and we're looking for ways to generate, we're always looking for different ways to generate passive income. So with this particular unit that we're possibly going to submit an offer in for, question is, can we get the price down low enough? Because the prices are still high, and with these real estate values remaining high, but these properties sitting on the market longer and longer, are these sellers going to be willing to come down on the price? Especially when sellers realize that the buyers who are trying to get loans for these properties are paying much, much more money per month in order to acquire the properties. The real question is will the sellers be willing to come down on the price low enough to make a buyer want to actually make the purchase? Now, for us, we're looking to generate passive income. So what we want to do is we want to make sure that we can get into a property that's basically going to pay for itself, right? And in terms of passive income, even if the property doesn't make hundreds or thousands of dollars per month in passive income, in this market today, I'd be more than happy with a piece of real estate, a condo that literally just paid for itself. So let's just say an entrepreneur, real estate investor came into the market, such as myself, and we could, put a down payment on the property and make sure that the expected rentals that could be received on the property will at least cover the overhead for the property. So let's just say that the mortgage payment, your condo association fees, the HOA fees, all of your expenses, your overhead related to that property, if your insurance, if all of that could be covered with the expected rents that would be collected through vacation rentals, if you're doing a short term, which is something that we would be interested in doing, something like Airbnb, VRBO. We've had a lot of positive experiences going on family vacations, even business trips, doing VRBO, Airbnb, and whatnot. So the question is, can this make sense? Can we lock in a deal that is good enough that will allow our expenses to be low enough to allow our revenues to be high enough to cover our expenses? So we're gonna have to do some homework. We need to look at some of our, number one, we need to look at comps. We need to look at historical rental history, specifically on this particular property, because I do believe that the previous owner was using this property as a vacation rental. So there should be some rental history, if not a neighboring apartment with similar amenities, similar number of bedrooms. This one's a 3 bedroom, 3 bath with views not only from the front of the property, well, this is technically the back of the property. So the back of the property, you've got ocean front views, but the front of the property, you've actually got a bay view, and you can see, you can see the strip and whatnot. So, yeah. Now, here's the thing that could here's the thing that could really just flip this sucker on its head. The Fed is expected to make some major changes this year. A lot of people are counting on this major Fed pivot. A lot of people are expecting that the Fed will potentially stop raising interest rates, but even go so far as to make a complete U-turn and potentially lower interest rates. Now, if this happens and you buy it right now, you could potentially see some explosive growth, appreciation growth in a matter of months. I'm going to explain that in a future video.